Hello and welcome to Self-Taught Finance. Today we're going to be talking about why I decided to switch my superannuation fund from a more managed approach that was assigned to me by my employer to a more passive indexed approach. Now, when I first moved from Canada to Australia, my very first employer selected my superannuation fund for me. Now, they had a nominated fund that they selected for all of their new employees, and this was with Host Plus. Now, this default option that my employer decided to select for me was the Host Plus Balance Fund. Now, this is an actively managed fund, meaning that there are individual people who are selecting the allocation in regards to how much they want weighted in bonds, how much they want weighted in stocks, how much they want weighted in alternative investments. And there are a significant amount of fees that come along with this because there are people behind it. After doing my research, I realized my best course of action was to move to a more passive approach, being index funds. Now, Host Plus offers index options, and so I decided to switch my money, my superannuation funds, from the balanced fund that was allocated for me to a more passive indexed option. Now, Host Plus offers a variety of options, two of them being the International Index Fund and the Australian Shares Index Fund. Let's take a look at the comparison between our actively managed options that Host Plus offers that you can invest your superannuation money into, and the index options that Host Plus offers. 4 different categories. The first one we're going to look at is the fund differences. What is the makeup of the fund? How is it structured? What's the differences between our passive indexed options and our active managed options? The second is going to be fee differences. So we want to look at what are the charges for the fees, what are the differences in the fees that are paid between your active managed options and then your passive index options. The third thing we're going to look at is the difference in performance. Ideally, over the long run, we always want to see a higher performance, especially when it comes to investing for a retirement. We want compounding to take its maximal effect, and therefore a small percentage will make a dramatic difference over the long run. Now, the last thing we're going to look at is what it's going to cost me over a 40-year period, which one's cheaper, how much it's going to cost. We want to know what is the cost over a long horizon, as we're going to be using our superannuation account for retirement. All right, so let's take a look at our fund differences. First, we have our balance fund versus our index balance fund. Now, for our balance fund, it's actively managed, and for our index balance fund, it's passively managed. Now you can see the differences. We have 76% growth, 24% defensive, and 75% growth and 25% defensive. Now there are a few differences for the balance fund. It does seem to own some property, infrastructure, private equity, credit, and alternatives. Next, we have our Australian shares versus our indexed Australian shares. Now for our Australian shares, it's 30 to 80 actively selected stocks. And for our Australian shares indexed, it's indexed to the ASX 200. Now essentially, they are both 100% growth and are very similar funds. And lastly, our international shares versus our indexed international shares. Now our international shares is 50 to 100 actively selected stocks, where our indexed international shares tracks the MSCI World ex-Australia Index. Now essentially they are both 100% growth, with the international shares having a little more exposure to the emerging markets. Okay, so the second thing we're going to talk about is the fee differences between each of the individual funds. Now, these fee percentages I pulled right from the Host Plus website. They break down the fee into a percentage, and this is the total investment fees and costs, and they tell you a percentage at a yearly, so per annum. So when looking at our balanced fund, we see that the fee percentage is 1.02% when compared to our index balance fund of a very measly 0.04%. Now you'll see similarities between these as well as these as well as these, and you'll notice that the actively managed funds have a higher fee percentage because they have to pay for the people behind them basically selecting the individual stocks or bonds or alternative investments to go into these funds. So you'll notice the Australian shares at 0.47% and compared to the index Australian at a 0.04, and then our international shares at 0.54% compared to our international shares indexed at 0.08%. Now the third thing we want to look at is performance. So I took the performance of the last 10 years. This is averaged per year, and this is gross returns, which is including dividends. Now, I could find most of the data on this. However, the index Australian shares, I could not find the data for the dividends included. However, it seems to be at approximately 8.5 to 9% annualized returns over the last 10 years. So then taking a look at our balance fund, we have a return of 8.33%, our index balance fund at 7.71%, our Australian shares at 8.98%, our index Australian shares between 8.5 and 9%, our international shares at 9.45%, and our international shares index at 13.76%. Now I took this number from the MSCI World ex-Australia Index, which is the index that this tracks. And we have to keep in mind that this number is very high over the last 10 years, and this is due to the large exposure to the American markets. Now, it's unlikely going forward over the next 30 years that we're going to see an average annualized return of 13.76, as this is a very high number. Now, our fourth and final thing we want to look at is the performance over the long term. So I'm going to be looking at 30 years. And I plugged these numbers into a managed funds fee calculator. So this is our balance fund. I started it with a $5,000 investment. We're investing for 30 years. We have contributions of approximately $10,000 annually, so $10,000 annually at 8.33%. So this is your balanced fund, your actively managed balance fund. And we have fund fees and costs at 1.02% and a 15% contribution fee, which would be your tax that you pay on your superannuation contribution. Now, the other fund I compared it to was the balanced index. So we have, again, $5,000 initial. We have our investment earnings at 7.71%, our management costs at our 0.04%, and again, 15% on tax. And here are the results that come with that. So when taking a look at a 30-year period, you can see that the balanced actively managed fund, after 30 years, you're going to have a balance of approximately $743,000, and you're going to be paying about $334,000 in fees, which is a significant amount in fees. You can actually see that the effective fees, this graph says that you're paying about 31.04% in fees. Now, when taking a look at our index balanced, we have our fund balance after 30 years of $806,000, and then our fees, it looks to be about $150,000. Now, this is including tax as well as the MER fee, and we do have to keep that in mind. That's why it's such a large number. Now, when comparing the two, you can see that if we go back over here, you can see that our balance after 30 years with the balance fund is going to be smaller than the index balance fund, even though the return is higher. And this is because we're going to be paying a larger amount in fees. As you can see, the fees do impact your 30-year return. You're going to have a higher return with the index balanced fund. Now, when looking at our Australian shares, I did the same for the Australian shares. So we have an amount of $5,000, 30 years, we have $10,000 in contributions, and 8.98% for our Australian shares. This is our actively managed account or actively managed fund. And you're going to see a management cost of 0.47% and our 15% tax. Now we're going to be comparing to the index option. Again, 5,000 initial, 8.75% for our returns, and then a management cost of 0.04% and our 15% tax. So when taking a look at the two funds side by side, we are going to see that this is our actively managed Australian shares. So we have a final balance of 939,000, and you're going to be paying about 280,000 in fees over the 30-year time horizon. Now, when looking at our Australian Shares Index Fund, you're going to see you're going to have a final balance of about 983,000, and you're going to be paying about 183,000 in fees. And again, this is including tax in this. Now, you're going to notice the makeup after 30 years. You're going to have about 77% in gains, and 22% you're going to be paying in about fees. And then 84% is going to be in gains and about 15% in fees. And you can see the differences again between the two. We have 939,000 here and 983,000. So although this, again, higher return, you're going to be, because you're paying more in fees, you actually end up with a smaller amount at the end. And again, smaller amount in fees and smaller amount in return. However, the difference is not very large, and therefore we do see a larger return over the 30-year time horizon. Now, when taking a look at our international shares, this is going to be our international shares index. Again, same 5,000, 30 years, 10,000, and we're going to see our investment earnings at 9.45%, a management cost of 0.54%, and our tax at 15%. And then we're comparing it to our MSCI World ex Australia index. So this is our international index option. Again, 5,000, a very high 13.76, so it's unlikely this would be moving forward, but this is the number over the last 10 years. And we have a management cost of 0.08% with a 15% tax. So these are the results. You can see after 30 years, our actively managed option will give you an end balance of about 1,012,000. And then you're going to be paying about 323,000 in fees over that time horizon. And for our international indexed option, we're looking at 2,657,000. Now, again, you have to keep in mind this is unlikely to be the result after a 30-year period. This is if this return is at a 13% return every year for 30 years. So this is probably an overblown amount. However, this is what we have over the last 10 years. So you see you're going to be paying fees of 527,000. And when comparing the two, you can see that your actively managed option is going to be paying about 75% in your returns and 24% in your fees, and 83% for your index option in returns and about 16% in fees. Now, after completing my research, I realized that the indexed Australian shares was the best option for me for getting exposure to the domestic Australian market. And then I selected the international shares index, which was the best option for getting international exposure to the international market. I selected these two funds knowing that I would be allocating all of my funds to stocks and none in bonds, which are located in the balance funds. This is due to my longer time horizon that I have investing. Now, I hope you guys like this video in regards to why I decided to switch my superannuation fund around from a more balanced kind of managed approach with higher fees to a mix of two index funds, being the international and the Australian shares index funds. If you guys have any questions, feel free to drop them in the comments below. Maybe leave a like and subscribe. Thanks.